There is an absolute tug of war going on right now. It's been going on for about 5 months. And the way this tug of war resolves itself is going to impact a lot of people's portfolios. And so we're going to look at it today and a couple other things just so you understand what the tug of war is, why it's so important, and how it can really affect yours and most people's portfolios. Whether you're 70 or 50 or 30, the outcome of this is going to be absolutely impactful on your portfolio. Hey guys, this is RC Peck, and I want to talk to you about three things, but one thing in particular, and that's the tug of war going on between the Nasdaq 100 and zero coupon bonds. Woo, no one's really looking at that ratio, but we're going to be looking at that ratio today and talking about why it matters to the portfolio of yours. And that's whether yours is you living in Canada or the US or Asia or Europe or somewhere else. This is a pretty big tug of war that's going to impact everyone on the planet. So let me jump over to that price chart. We're going to look at that, and we're going to look at a couple other things. So here is a really zoomed out view of looking at the Nasdaq 100 using the tracking symbol QQQ and zero coupon bonds. Officially, it's the PIMCO 25-year zero coupon bond US Treasury Index ETF. That's a mouthful. So what do you need to know here? If the black line is going higher, the stock market is more stable and you have nothing to worry about. When the black line is going lower, especially when you see those big drops, that means there is more volatility in the stock market. Not just the US stock market, but all stock markets. So I'm going to zoom in on this, but if you kind of look to the upper right, you kind of see this just sidewaysness happening. It's just a back and forth. It's a pretty tight channel. And if you look at the rest, what we're looking at is 10 and a half years of price. We're looking at the Nasdaq 100 priced in zero coupon bonds. So if you look at the rest of this 10 and a half years, you don't really see this tightness here for that long, right? And so how that resolves matters. Now, the Qs have been going up, 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 and now they've been going sideways relative to zero coupon bonds. So I'm going to zoom in a little bit and let's just look at this ZROZ. Let's look at it right here. So here it is. All we are zoomed in on. Let me just show you here. This right here, all I did was zoom in on it. So here it is right here. And you can see there's the sidewaysness or kind of the tug of war that's going on. A break below, that means there's going to be a lot of volatility in the stock market. I'm not talking crashes or end of world, sorry, Harry Dent. I'm simply saying that the market's going to be under a lot of pressure. We could see 10, maybe 15% correction would not be out of line. And if the price breaks up above those two blue lines, that means the market's even stronger. And really, you can get much more aggressive in the stock market. Now, these bottom two charts down here, I just want to quickly, that's zero coupon bonds. So between the two blue lines, that's zero coupon bonds. And just showing you, since zeros made a bottom in March of this year, they are up about 20%. During the exact same time frame, let's just go here, the Nasdaq's up about, let's call it 16%. So zero coupon bonds are outperforming the Nasdaq. That's typically not a sign of stability. Now look, not everything's crashing. There's signs of strength. Semiconductors are doing well. Healthcare is doing well. Real estate's doing well. But this is a ratio, and a ratio tells us the inner workings of the market. So that's just something to keep an eye on. I'm going to keep an eye on it. And as far as the go, no go, it's always a range, but I'd say on this ratio chart, anything below 2, let's be more conservative, 2.25, then we really have to think about how strong equities are going to be for the next, let's call it 90 days. Okay, a couple things that have gotten my attention. Now, I don't necessarily need to show a price chart of this, but I just want to put some things in perspective. We live in a relative world, right? So if you make 300K a year and everyone around you makes 30K, you feel really rich. But if you make $300,000 a year and everyone around you makes 3 million, you don't feel as rich, right? Because the relative difference is pretty drastic. It's very noticeable. So here today, we have 10-year yields. I'm going to talk about yields for a second. We have yields in the US, 10-year Treasury yields at 1.17%. It's not that much, 1.17%. But again, we live in a relative world. If you live in Japan, their 10-year yield is 0. So we're crushing the yields on Japan. Even worse, if you live in Germany, it's negative 0.48%. So in Germany, you give your money to the government. You're not getting anything back at the end of the year. Actually, you're getting a little bit less back. That's pretty amazing. So that 1.17%, though it seems relatively silly or ridiculous here in the US, it's actually beating Germany, which is the engine of the largest economic bloc on the planet, also known as Europe. It's bigger than Japan, right, at 0.00. Japan's no weakling. It's the third largest economy on the planet, just going from countries. And I won't forget the UK. Is it Europe? Is it not Europe? UK's paying you 0.52. So it's in second place, but still, it's pretty bad. And so that's the world we're in, right? We have to either trade the market that we're in or invest in the market that we're in. And yields are just looking really, really, really bad. If I were to look at the zero coupon bond, just super zoomed out and nothing else, ZROZ, there it is right there. And zeros may want to get back up to test this 182, 183. Has a 3, it got kicked out, got pushed back down. Sellers came in at 100. Let's see, we'll call it 183. Got kicked out 3 times. Like, nope, meaning people supplied the market when ZROZ got to it. But we're way down here, still needs to break above this 160. But if you can see this big kind of 10.5-year price, it is generally speaking going up and to the right. To me, it would be fascinating if the zero coupon bond from a price point of view, this is a tracking symbol, it's an ETF, got back up to that 183. Yields would be crazy low again, and everyone would be refinancing again. I have some friends who are mortgage brokers, and they said last year was their best year ever. In fact, one of the months, I think it was November, but I don't remember specifically, they made an entire year's of income in 1 month. So it's pretty crazy. Okay, one more thing I just want to show, and then I'll hit the pause button here, is let's just quickly look at emerging markets. So I'm super zoomed in here. Don't worry about these 2 bottom ones. This is zeros and Qs. Actually, let's just get rid of them. I'll just get rid of them so that doesn't distract us. But super zoomed in, we're looking at a 10-month price chart. And here's emerging markets. So it was kind of a fake out. So if emerging markets break above that range, they're back in the range again, but definitely has kicked people out. And emerging markets has absolutely been sucking wind this year. It's been the worst place on the planet geographically to be. Specifically, China has just been absolutely pulling it down and just crushing souls in that country. What they're doing right now is pretty amazing. They're deciding winners and losers, though they probably have been doing that for quite some time. So the takeaway this week is there's a tug-of-war going on between Nasdaq 100 and zeros, and the way it resolves is going to impact a lot of people. I'll keep a look out on it and keep track on it to make sure we know what's going on with that. So guys, that's what I have for you this week. If you like this, please click the like button and let me know where you think I got it right and where I got it wrong, or where maybe I missed something. You can leave that in the comment. I read all comments. And if you like this video, you're gonna love my Clarity and Control free course that shows you those 2 things: how to get clarity back over your money and how to get control back over your portfolio. Absolutely free. Thanks guys for being in my world, and I will see you on the next video. Okay, bye.